Welcome to the new episode of Brave New Edge, the podcast where industry leaders share unfiltered conversation on how data, AI, and human judgment are redefining the edge in investing, innovation, and capital markets. My name is Nikola Legetic, and today we're joined by Derek Eichenwald, Triumph Capital Management CEO and Senior Investment Executive. Welcome, Derek. Great to have you.
Thanks for having me.
Of course. Just to start, can you give us like a high-level introduction to your role as a CEO and a senior investment executive at Triumph?
Sure. So my name's Derek Eichenwald. Triumph Capital Management is the name of the firm. We are headquartered here in Denver, Colorado. We have about 25 folks who work here. We have offices up and down the Front Range, including Nevada and California. So we're a boutique firm. We manage about $550 million. Myself, I've been in the business for 25 years and started Triumph Capital Management as a registered investment advisor officially in 2016.
Excellent. So it's a RIA, technically. So you're providing advice, estate planning, etc., right, for people all over the country, I'm assuming, right? But okay, got it.
Yes.
So just like what's your typical kind of week look like between balancing your obviously executive duties and then the hands-on, whether it's raising money or portfolio management?
Yeah, fantastic. So, my duties, the one thing that's great about this job is it's not the same thing over and over again. I obviously personally had built a book. I have many affluent clients and that type of thing. So I'm working with them all day long. And at the same time, I'm running the firm in my executive position. So I'm working alongside the advisors with different issues that they may have or providing them help and guidance. And at the same time, managing a staff. So juggling many balls in the air. But we manage the money in-house. So we have 18 models that we run today. And our 18 models range from anywhere from aggressive all the way down to conservative, and then some interesting things in between, such as tactical management and what have you. All of that stuff is also in-house. Our main custodian today, we're multi-custodian. We clear with both Schwab and Fidelity. But our main custodian today is Schwab, and we use the iRebal service that Schwab acquired when they did the takeover of TD to run those models in an efficient manner.
Got it. That's interesting because a lot of RIAs actually gather the assets and then pass them on to outside managers. So this is somewhat of a unique setup, which is actually perfect because I would like to ask you about considering that you are managing the funds internally with these 18 portfolios. How does the portfolio management part of the equation changed maybe over the last couple of years with the advent of newer technologies, whether it's generative AI, just in general, digital transformation, automation, things like that?
Yeah, absolutely. The AI revolution, before AI was a household name, we were using different versions of AI. Because obviously we complete a lot of tasks every single day, and having automations set up has always been helpful. Today, or at least over the last 6 months, it's as though that AI has been put on steroids. Today we use AI and plug different things in from our models to come up with commentary, to come up with statistics, to look at it from just another point of view, to see what AI spits back at us. More and more, we've used it for some research. We obviously don't rely completely on the research from AI, but it's interesting when we plug that in and then based upon our own internal research to see if it's pointed out anything addition, to see if it's conflicted with any of the information that we've produced internally. But really, the AI evolution has been fantastic for us, and we use it every day. And personally, I use it in all 3 segments of my job.
Got it. So it's definitely like an efficiency engine, right? In my line of work, it's going through a 10K or 10Q. It's like it's before it was 500-page S1, that can be, pull the most important things now in 2 minutes. You just can cover so much more ground. But okay, yeah. So yeah, I like what you said about, AI was, I mean, technically since, the 50s and 60s, the automation part of the equation, this generative stuff is new, and it's adding another kind of layer to it. So are these, but in general, like, so these are the things you use it for, but industry, the advice and portfolio management industry in general, are they like the bigger picture, like the AI related trends that you're seeing right now? Can you maybe discuss that?
Ask me the question one more time.
Yeah, I mean,
I
I mean, stepping out of your day to day, like, so maybe discussing something with vendors, or maybe, friends from different RIAs. Like, what are the overarching kind of trends that the AI is being used in wealth and retirement planning right now?
Yeah. So, the AI trends, obviously, as an independent firm and as an RIA firm, we kind of set compliance guidelines and that type of thing around our AI. How it's being used today by the big firms, or at least by the big firms' advisors and that type of thing, I can't comment on. But internally, and when I talk to associates and colleagues in the independent and RIA space, I think a lot of us are using it the same way that I described. If we're have a complicated situation with a client, in other words, consulting AI for, hey, what happens when a irrevocable trust decants, or what might be some of the best strategies for me to unwind a client's consolidated position inside of a security when they own multiple different types of options, ISOs, RSUs, these things. Are, can sometimes be confusing, or they're issues that you're only dealing with from time to time. And then, just other areas that is outside of our total expertise, but of course we comment on. We don't give legal, we don't give tax advice. But of course, when it comes down to proper tax harvesting or different strategies, AI has been amazing in pointing those types of things out. Hey, here's a strategy you might want to consider. So we use it a lot for that. When I'm talking to my colleagues, they seem to be using it for the same thing.
Got it. Are there any, what would be the right word? Maybe like fears or uncertainties that you are experiencing about this AI shift? Maybe something that your clients are concerned with, that, or like any type of challenge that you have that you would like to see this progress to?
Really right now, the only negative downside that I hear from clients is, hey, AI is going to replace a whole bunch of jobs. And, I'm always quick to remind them, we're always replacing jobs, right? The streetcar replaced the horse buggy. Um, Cars replaced, different areas of transportation. We've always been replacing jobs and replacing jobs. Who's going to build the AI? Who's going to build the infrastructure? When we think about AI today, and you think about where will AI be 5, 10 years down the road from now, and you visualize that in your mind, well, one thing that you also need to think about is, how do we get there? Today, our energy grid can't really get us there. So there's going to be a huge amount of job creation in the energy space, in the infrastructure space. At the end of the day, you need data centers. People don't realize this, but data centers, the inside of them isn't a dampened storage unit. They have the specifications of surgery rooms, so the whole HVAC systems that need to run there. Who's going to maintain that building? Who's going to work on the AI? Who's going to maintain the AI? Well, robots will do it. Well, who's going to maintain? You'll see job creation. It's like, what came first, the chicken or the egg?
Right. That's no, absolutely. So you can see that in the market, like like you said, the HVAC stocks, right? Everybody thought before they were like a housing play, but actually there's the applied systems that are 10, 20, 50, $100 million are flying off the shelf. So yeah, the market's already kind of rewarding that stuff. Okay. And just last on maybe like the AI is in an ideal world, like what would you like like let's say that there's no barriers, like we'll figure it out. We the AI is going to consume a tenth of what of compute that or power that the computer is requiring now, and so the macro constraints are solved for. Like, where would you like to see AI as a part of your day to day or just in general process take you in a couple of years? What would you like it to be able to do?
Yeah. So great question. And when I answer this question, I don't want people to say, oh, you can do that today. There are ways to do it, but it's not as easy as it may sound. So today, I find that AI is wonderful for research or quickly researching topics that you're somewhat familiar with. I do find that AI isn't always correct. In fact, often I'll find little things that are incorrect. I don't know today, but at the beginning of the year, I would ask AI, what are the retirement contribution limits for 2025, and it would give me 2024. Now, of course, I've programmed the AI to not hallucinate, not lie, not make up answers. However, it was still grabbing 2024 information. And so, I think in time that will be fixed. It won't grab incorrect data. That's one. Number two, today in my world, what I visualize is I visualize an AI system where if I sat down preparing for a meeting, I could literally say to my AI, I have a meeting today with John Doe. And AI is able to go look at their client folder. AI is able to go sift through all of their emails. AI is then able to look at their public social media profiles. And AI is able to give me really a update on the client. In other words, it knows what accounts they have, what positions they have. And it does that all in 1 second. When I say that, you may think to yourself, well, Derek, you can do that today with various connectors and
Yeah.
various data feeds, so on and so forth. But I will tell you that you really can't do that, right? It doesn't work the way that we visualize it. I think we'll see some leaps and bounds in that area over the next 3 to 5 years.
So you would want a more like a solution type of uh, utility out of it, as opposed to piecemeal here and there. You gotta patch it all together. I get it. Right.
Yeah, you have to patch it
No
all
worries.
together. Then all of a sudden, one of your connections or one of your flows
Right.
doesn't work. Uh, if you thought about it today, you have a new client or you're preparing for a client meeting. Think of all the steps that are involved, adding them to your CRM. Hey, have they changed jobs recently? A lot of times you'll go and look at LinkedIn perhaps for that. Oh, yeah, where's this guy work again? Or what profession's he in? Whether that's in your CRM or you need to go to social media to find that out. Obviously, you could ask the client. Today, we're all using different types of recordings when it comes to virtual meetings and what have you. But those notes in large part are being stored in that virtual recorder. So I think more synergistic activity between all the different facets that we use. And again, yes, today you can use connectors to do some of this. It just doesn't do it as efficiently and effectively as one would imagine.
Yeah, I feel like you still need some like coding knowledge to really bolt up the thing in the way you really want it, and that's what 0.1% of the population can do that. So I'm with you. All right, let's maybe talk about Triumph a little bit, and the goals of the firm. So you mentioned the current assets under management, but maybe looking out, what are the KPI standpoint, or whatever that means. What are your internal KPIs in terms of assets, or do you have any other ones? And maybe take us maybe 2, 3, 5 years.
Yeah. So I'll say this: when Triumph was first started, myself and everybody basically who works here, we've all worked together um, in different roles long before Triumph was started in 2016. And our roles, where we worked previously, we worked as investment advisors as well as for a broker dealer. And, obviously working with a broker dealer, we found that we had many restraints in helping our clients, right? We were constrained by product offering. We were constrained by different things we could do for clients. One of the reasons why Triumph was started in the RIA space and not being affiliated with a broker dealer was to be able to serve the general public and bring all the tools to those investors that they should have, you know, the availability to access. And so that was the original goal of Triumph when we first started out. And here we are, it's almost 10 years later. It's been 9 years, and it seems like it's gone by overnight. But the goals of the firm at this point are to really just continue what we've been doing. In other words, serving clients, helping families, accessing all the tools that are available to extremely high net worth clients and bringing that to our clientele if they don't have $100 million, and that type of thing. Really long term, I visualize the firm continuing to grow, doubling its asset size over the next 5 years, bringing on new advisors who see that same vision that Triumph started with back in 2016, and getting more into the institutional space. I said earlier that we manage 18 models. Not all of the firm's money is inside of those 18 models, although we do have a good portion of it inside of the models, but starting to roll those models out onto various platforms and have access to them for other advisors to use. Because as you mentioned, so many firms bring in the money, and then what they do is they push it out to another firm for the management of it. And I think our fund lineup, if you will, or our model lineup, I guess I should call it, has done very well. And we've been tracking those models now for over 7 years and getting them GIPS verified. We're already on Morningstar, and I think that'll be a huge growth area for the firm.
Awesome. What is the strategy? I mean, what is the approach? Is it more like a factor-based models, or is it bottoms-up stock picking, or I'm assuming you have some credit too, or fixed income. So maybe just
Yeah, great question. So what we do inside of those 18 models is it's kind of funny. When I say it's kind of funny today, when I look at the marketplace, I notice that everybody has something for their ETF that's a little bit off the beating path, right? But everyone's gotten away from just the basics. So we started with the basics. We have an aggressive model, an aggressive moderate, a moderate conservative, a conservative, and then a stable. And I think that takes up about 6 of the 18 funds. They're very basic. They're run inside of ETFs. They are active, so we are tax sensitive if we need to be, but we're also active inside of those. So we have that core lineup that we offer. Then when I said we have some things off the beating path, we have a tactical model that can literally be in 100% cash or 100% gold or anywhere and do anything. We have a global tactical model as well that, gives us access to go outside of the U.S. and invest in emerging markets and Europe and South America and other areas. We have a ultra fund, meaning the ultra aggressive fund, where it's a handful of individual stocks. And those individual stocks, the reason why we call it the ultra fund is it's hyper concentrated. Typically speaking, there's 15 stocks inside of that model. We have a dividend model. You talked about income for a second. Inside of our dividend model, it's tops down approach and looking at companies that have wonderful dividend history and providing clients income by using that. So those models we keep like that today. When we use those in-house for our clients, we'll sometimes complement that with a covered call option strategy on top of it to produce additional income, hedge some downside risk. And we also will feather in individual bonds into client accounts. On the model side of things, we don't have a model that's complete debt, meaning using individual bonds. Our stable model does use a lot of bond ETFs, and again, that's actively managed. But of course, if we're working with an advisor, either internally or in the future outside of the firm, and that client wants us to build a sleeve of individual bond holdings for them, or our advisor wants us to do that, we will absolutely do that.
got you. All right, so this is a big point of differentiation. But if somebody was to ask your clients, what is Triumph's or yours personal, but I'm assuming the culture is a reflection of firm culture is a reflection of yours. What's the company's like strongest suit? Is it, it can be just something on the service side, outside the differentiation on the model side?
I guess our biggest suit is you know, with all of us having worked together over the last 20 years, and 9 of those 20 years being at Triumph. Of course, we've had some new advisors join, so I shouldn't say all of us. We have, a very strong family culture. We're able to serve our clients. It's kind of interesting. I don't know who would be listening to your podcast. Probably a lot of advisors. And so they may mitigate what I'm about to say, and I agree with the mitigation of it because I don't think clients understand it. Clients come in and they're really interviewing you. In other words, do they like you? Do you seem trustworthy, or do you seem knowledgeable? These types of things. Do you present well? And those things often are the most important. In other words, that's how advisors are bringing in assets today. But I think internally, one thing that separates us is the fact of, back to what I said, it's not the models. It's just the fact that our advisors or our firm can truly serve the end advisor because we are independent. We have open architecture. Even when I brought up the fact that we can do individual covered calls inside of the client's portfolio, talking to folks outside of the RIA or independent space, they're like, oh, I can't do any of those things. The buying of individual bonds. So I think internally, if you're just talking to folks in the money management business, the tools and the strategies that we use for our clients is really something that separates us apart. Now, again, I think clients probably mitigate that because they're not inside of this business, right? They're busy doing what they do for a living, and they go, hey, whatever, is my money going to grow?
Right, right. And then, since this is again a call on intersection of investing and newer technologies, like maybe 6 to 12 months out or 2 years out, do you envision any major like implementation of anything technological? And then, if yes, what are some of the challenges you kind of foresee?
Yeah. So yeah, I do think that technology will change things. My hope is some of those things that I just mentioned to you about AI getting better and systems being able to talk to each other much more efficiently. Prior to this whole AI revolution, you looked at all these robo-advisors. And really early on, we were looking at the robo space. We spent hundreds of thousands of dollars looking at it. We hired two internal folks here just to do code and everything else. And Triumph was going to look at kind of launching that our own robo advisor in house. What we found, and this was again a number of years ago, so we were using things like Zapier and Power Automate to try to automate such things, and also back-ending it with DocuSign's very limited area. Today, if we were to jump into the robo space, we could make it work in an afternoon with all of this AI stuff, except for the robo space it's come and gone, right? And so we haven't done that. But I do think that down the road, everything from client onboarding to having a more seamless client experience, so on and so forth, we'll be using technology to do those things much more efficiently and effectively. And I think we're seeing that today inside of the marketplace, right? Companies today that are using AI, they're operating more efficiently and effectively.
Yeah, actually, we had another guest, and an interesting point was brought up is, market valuation, et cetera. And it's, if anything, the AI revolution, or whatever you want to call it, it's a margin story, right? It's a cost. So might not be a revenue thing for a lot of people, but like if United Health is hiring 10,000 adjusters a year and it's a high turnover job and they leave, it can just be replaced with agents or something. So it's like if you look a couple of years out, the surprise might be on the margin, but really on the cost side for these companies that know how to, how to do it and what they're doing. So,
Or think about it in my situation. I don't know. 8 years ago, I hired two tech folks. They had coding experience, great backgrounds. They did a ton of work. We actually ended up building the robo. It just wasn't as crisp and clean as we wanted it to go. And then the back end management of it also became somewhat complicated. But as I mentioned, and so what did I spend, or what did the firm spend on doing that? I don't know, $300,000-400,000 over the course of 12 months. Today we could get that done in 2-3 days, right, with the use of AI.
yeah,
And the software providers also adopting versions of AI. When I said DocuSign's very limited back office, folks listening to your podcast may say, what is he talking about? It's not limited. 8 years ago, it was very limited. Today, yeah, you can go in there and like I said, we could get it done in 2 days. So think about that. That just saved a company. If I think about it in my own personal situation, $300,000-400,000 and time and energy and so on
yeah.
and so forth. So
Well,
yeah,
you were ahead of the time, but it's sadly cost you 300-400 grand.
yeah. I mean, what are you gonna do?
Hey, Derek, this was great. I mean, we're pushing on time. Again, this is it for today's episode. Thank you again for joining. This was very insightful. We tend to have, director of research here, but really, to get a CEO that's both involved from the managing of the place and also from the investment side is a unique guest. So thank you again, and all the best in your endeavors. And we'll share the research at the end of the podcast.
Thank you so much. You guys have a wonderful afternoon, and we'll chat soon.
Okay. Thank you,
All right.
Derek.
Take care. Bye-bye.